During the recent UK Investor Show, I was lucky enough to be sitting beside one of my financial market heroes, Evel Knievel, otherwise known as Simon Corkwell. And during the presentation on stage in the Excel Centre, we went through some of his trading ideas and views on life. But unfortunately, it can be said that ASOS has not been one of his triumphs. I think he's been short of the shares for over a year, and they're causing him considerable financial pain. It's not difficult to see why by looking at the daily chart, where there's been a rising trend channel here in place since May last year, so the best part of a year. The stock hasn't actually fallen below the 200-day moving average. This is the 200-day moving average currently at 24.81, but hasn't been below there since it was around the £16 level. And since then, we've had support for the shares come in at or just below the 50-day moving average, which is something you only see in the most strong of situations. Away from the price area, there's also the RSI providing the RSI indicator providing a buy signal, in the sense that we've had two bounces off a November support line there. Fresh buy signal also in the sense that we've broken back above the last little peak there at RSI 50. It's now 54, and typically the mid 50s are the most comfortable place to go long of a stock or a market. In the near term, we actually saw a head and shoulders reversal with a neckline around the 31.50 zone, and this sort of worked a little bit. The shares fell down to just below £30. There was an implied target around £28, which was the old January resistance, but the shares are so strong they didn't even go back down towards the target, and have actually gapped up through the neckline at 31.50, just to underline the fact that this is a failed head and shoulders formation. And you can expect, in fact, the stock to sort of doubly beat up the bears given this failed signal, with the implied target here, the top of last year's price channel, heading for £36.50 or even more, towards £37. So really the message at the moment is that while ASOS remains above the £30 mark, the floor of last year's channel, we're looking for at least £36. And probably, given the way things are going, with a new support coming in above old resistance, there's at least £1 there of differential between the old resistance and new support. We could be looking at a very solid push to the upside. The time frame is probably the next 4 to 6 weeks. Could be even quicker, the way given the way that shares have gone up over £1 today, but 4 to 6 weeks is probably the end of May is probably a conservative time frame on how long it would take for the stock to head higher. If you're trading the stock on a very close basis, you wouldn't want to see the shares back below the overnight gap and the 50-day moving average at £30.88.